What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock. Rough start to the year for those high-tech growth names, unprofitable stocks. And we know that's because the Federal Reserve still hasn't guaranteed a rate cut. We don't know when it's going to happen, if it's going to happen in March or if it's going to happen June, July. We don't know. And that's a lot of uncertainty in the market. We need money flowing inside of the market, lower interest rates to get these tech growth names, flowing again, making some money, making growth, etc. So what we need to do right now is understand the higher quality names are buying opportunities. And that's what I've been doing the past 2 weeks, for the SoFi stock. Just continue to buy up the dips. No one can time the bottom. And it's not just SoFi, guys. I'm telling you right now, other stocks are getting hammered even more than SoFi. Now that I really took a look into it, today, I'm going to show you that inside of this video. So just know that we have earnings on our side. Right now, all the bear headlines that you're hearing are just FUD because we don't even have the Q4 numbers for last year, which also Q4 is going to show us the forward guidance 4 quarters for this year. So everyone, all these headlines, I've just been hearing crazy stuff, accounting issues, defaults rising, capital raise, fake account growth. It is so crazy right now because the past couple of earnings have been stellar as far as growth and scale. The only thing we're missing, the final piece to the puzzle, is profitability, which we should be getting in just a couple of days. So just let their FUD run out to the last second. I think SoFi will get a 1 to 2 day bounce, a random day heading into earnings. You're not just going to fall off a cliff every single day until earnings because the shorts, they're not covering. They're just aggressively getting more aggressive in their shorts. So they should definitely cover eventually, probably next week, a random day. So we should get a bounce. So I would like to see the SoFi stock over $8 prior to earnings, just so you guys know. So it's been a rough start. So if you find any of this information useful today, be sure to smash the like button. Don't forget to drop a comment and please subscribe to the channel. We're going to be keeping you updated daily on all the breaking news. Let's get into the video. All right, guys, you can really just see what's going on with that big money. The big money is still playing it safe out there. They do not want to touch these unprofitable, high-tech, high-growth names. They just don't want to do it. There's just too much risk in the market with the rate cuts not a defined date yet. So take a look. S&P 500 almost 1% green. Dow, legacy companies 0.5% green. Nasdaq, a little bit of tech heavy, 1.3, and then you got the Russell 2000 about 0.5%. So small caps are getting smoked by mega caps today, basically. And you can see SoFi was down 1.5% today. Something to note, the price action was pretty much the exact same for SoFi yesterday, down about 3-4%. A little uptrend at the end. Today, down 4%, a little bit of an uptrend at the end. So it looks like they are exhausting sellers to the very last second. Guys, these short sellers, these market makers, they can see daily second price action and selling, and they're not going to let this bad boy go for a run up until they flush out all the paper handers to the last second. Guys, this is the S&P 500. It has every single company in the S&P 500 on there. And you could just take a look at the top, guys. The Magnificent Seven, all green. Microsoft, Apple, Amazon, Nvidia, Google, Facebook, and Google Class C, guys. These are the stocks that just won't stop running. They've been running for a year and a half. Pretty much if you pick any of these companies besides Nvidia and Facebook, you've got a minimum return of a 50%. Those, of course, ran crazy, but every single other one, 50% return, 75% return. Absolutely incredible. And the market is still not willing to touch these unprofitable names. That's why I want SoFi to become profitable as fast as possible. And also, management said full year profitability. We can start getting grouped into a smaller batch, a smaller company, profitable with high growth, and eventually this should be the outcome we're looking for in the next decade or so. So I think a tide is changing for SoFi once we hit profitability. A little bit of update today. Dan Dolev of Mizuho, he's defended SoFi multiple times. He reiterated a buy today, but also lowered his price target from $15 to $12. So very, very confusing. He could have just maintained the 15. Maybe it's because SoFi has dropped down so dramatically. This has something to do with his, star rating and how he gets his returns, his success rate and stuff like that. but he had a massive return calling Affirm a buy. That stock Affirm went up 500%, $9 to $50. So imagine if we got those types of returns on SoFi, a nice little 500% reversal. Everyone, is going to be jumping for joy, on top of the world. It just hasn't happened for SoFi. I think it's because we're lumped into that legacy bank category still. And we need to see parts of our business, especially the tech platform Galileo, re-accelerate growth. Remember, our last quarter, we just reported 6% growth for Galileo, which management said was pretty solid. But hey, they said they are looking to get into the high teens growth. So maybe we'll see that 6% jump to an 18 or 19% growth and continue that trend for the next 4 quarters. And then the Bears will, not have so much to talk about because the business is profitable, massively profitable, actually. I mean, we're talking 35% margins on Galileo and 20 to 25% growth potentially. I mean, that is absolutely amazing. Guys, put it this way. Let's say 110 million revenue for Galileo puts us to near 440 million run rate. I mean, $500 million. That's not bad. Also being profitable. So that's just a part of the business that the Bears have been right about and are using that as a shorting tactic. Guys, I know everybody likes to buy call options. You see that I really stopped talking about call options on here because, so many people have been burned the past 2 years or so on multiple companies. I mean, dozens of companies that, went from SPAC $10 down to, pennies on the dollar, just short-term traders. It's just a crazy world out there, but I got to show you this stuff, guys. These are the 2024 leaps. So the 2024 leaps are just a specific day that comes out. People were purchasing these 1 to 2 years ago, and you could really just see that by the open interest. So you can see the open interest right here is, absolutely incredible. We're talking 552,000 calls, almost a half a million, almost 400,000 on puts, and you can see those expire tomorrow. And this is basically each call 959, 858. So you got the open interest right here, 11,000, 42,000, 22,000, 37,000. And every single one of them from 8 to 15 are a penny on the dollar, guys. Take a look at that. They absolutely demolished it. I mean, the reason for that is because we crushed the stock 30% in 2 weeks. So this is what can happen in call options. Even when you buy out longer term, a lot of these people were 1, 2 years ago buying $7, $8, $9 calls, and if they held long term, I mean, down to a penny. So you got to be very cautious when you're buying these guys for sure. Now, guys, I just want to look at these other names. It's not just SoFi. I want you guys to see what's really going on with the market. I think SoFi, in my personal opinion, would have held up better than every single growth stock if it didn't get that nasty New Year's downgrade. I'm telling you guys, we were looking so strong on the charts, guys. We sold off from 11 back down to 6, back up, guys. We were at 1050, about to break 11 pre-earnings. And then that downgrade just got everything snowballing into the wrong direction. I want you guys to see other companies that didn't even get downgraded. So, guys, we got right here. Just take a look. We're going to just look at the 1 month chart because that's when it seemed like everything really started tanking. So we got Block right here. Take a pull down, negative 19% on Block. We got Upstart right here, $47 top. It might have been a little bit higher. 1 month chart, negative 33% on Upstart. Robinhood got the 1 month chart. Looks like the top was around 1326 or so. Negative 19% on Robinhood. We also got Affirm. Top was right around like 51, 52. 1 month chart. Negative 22% on Affirm. And we got Coinbase. Top was right around $187. 1 month chart. We have negative 33% on Coinbase. And then we have SoFi right here. About 1030, 1050 was the top. 1 month chart, negative 28%. I believe earlier today it hit about 29 to 30%. All right, guys, and there we have Blockhood, Affirm, SoFi, Coin, and Upstart. It looks like Blockhood and Affirm held up the best at about negative 19 and negative 22%. And then we have middle tier, SoFi at 28%, and then Coinbase and Upstart at 33% and 35%. So, guys, it's not just SoFi out there. I really believe all these downtrends happened right around SoFi's nasty downgrade over that New Year's, and SoFi was down 15% immediately. So if we didn't get that nasty downgrade, I think SoFi would have been stronger than every single one of these companies, not just in the middle, but maybe 15 to 19%, at the top tier. So guys, we got royally screwed And I think, this is just the time for SoFi to kick in the fundamentals, show that the growth is not going to slow in 2024, show that, the borrowers are in, good hands, good credit scores, defaults just maintaining where they're at. And cash stays high, deposits stay strong, and I think this is just the time for SoFi to just destroy the Bears and write a new bull case scenario for 2024, full year profitability, guys. We are looking strong. We need to get to earnings, guys. Just a couple more trading days. I think we're going to get a small bounce, 1 or 2 days. The shorts are still at the max pain that they're trying to apply on retail investors. We just got to get through it, guys, but understand, time is on our side. If you made it to the end of the video, I want to say I really do appreciate it. I enjoy doing these videos for you guys. Once again, these are great buying opportunities in my personal opinion. You can see SoFi is not the only company getting hammered out there, and SoFi, unlike a lot of other names, are going for profitability last year, Q4, and full year profitability 2024. That is insane when you're talking about 30 to 40% compounded growth for the next, couple of years. So it's just a matter of time, guys. We need to be patient, understand we have great management on our side. Once again, my name is Kyle. Hope you have a great day.